So now we're going to go into the panel discussion, and this is where we will show what execution looks like and what it could look like from the area of corporate localization to AI integration, which Ngozi had spoken to, as well as even the data readiness and governance accountability. So I'm very excited again, like I said earlier. Welcome again to those of us who joined while Ngozi was speaking. Each of the speakers we've brought on this call today brings lived experience, not theory, in actually applying ESG, not just for business performance, but in building resilience, as well as the impact which we know Africa and Nigeria desperately needs. So please pardon me. I know all of our speakers have really long, deep, engaging profiles, but I have taken the liberty of, just shrinking the profiles a bit to give our participants context as to why it is important that they hear from you, and also so that it gives context as you explain, your experiences and the practicality of applying what we're hearing about today. So first, and this is not because he's the only man on this panel, is Toby Adeniyi. He's widely known as the Integrity Maven. I love his nickname. And he is the current managing director of Unilever Nigeria. He brings over 16 years of experience across the FMCG industry, spanning everything from sales to logistics to innovation, supply chain strategy, and factory operations. He's also currently the VP and on the executive committee of the Manufacturers Association of Nigeria. And because he's worked across Africa and Asia, he's worked in Singapore, the Philippines, and Indonesia, he brings a truly unique global perspective on leadership, culture, and performance. And maybe most importantly for this conversation is that he is passionate about putting Africa and African talent on the global map. And that's what his leadership philosophy brings to bear, as it is grounded in integrity and purpose, which I think aligns very strongly with today's ESG conversation. So thank you very much, Toby, for joining us today. And please join me in saying a big welcome to Toby.
Thank you.
Next up, thank you, Toby. Next up is Ria Jaram. She's the Chief Operating Officer of RIM. RIM is actually a partner to ESG in Action Africa, and is a company that truly redefines and is redefining how organizations approach ESG through data, technology, and intelligence. Ria is passionate about using digital tools to simplify sustainability, making it more accessible, actionable, and transparent for businesses everywhere. To this conversation, she'll be bringing strategic and operational insights into how companies can really move from simply having an ESG intent to measurable impact. And I'm thrilled for what she has to share with us today. Ria, welcome to the panel. Ria, can you hear me?
Yes, thank you so much, Bella, for the kind introduction.
All right. Next up is Nkemdilim Owaje Bego. She is a trailblazing technology executive and one of Africa's leading voices on digital transformation. Nkemdilim does wear many hats. She's the CEO of FutureSoft, where she leads AI-powered transformation and innovation consulting. She's also a co-founder of ESG in Action Africa. So through her many board roles, across public and private sector, she continues to champion responsible innovation and tech-enabled sustainability. So I think she really does bring a rare combination of strategic insights, governance expertise, as well as technological foresight. Thrilled to have her on the panel today, and really I think we should really look to her on she's going to share her insights on how Africa can harness technology and governance to achieve meaningful ESG impact. Nkemdilim, welcome, even though this is your house as well, but welcome.
Thank you, Bella. Thanks for having me.
Okay. And last but definitely not the least is Tino Ade Awe. She is one of the foremost voices in Africa with regards to corporate governance, sustainability, and markets regulation. Cough, cough, we have regulator in the house. She's the CEO of TMSN Limited, where she helps organizations integrate governance and ESG principles into their strategy and operations. Prior to this, she was the inaugural CEO of NGX Regulation Limited, where she led the strengthening of investor protection and corporate governance standards across Nigeria's capital markets. She currently serves on several influential boards, including the Global Reporting Initiative, the GRI, which is the world's leading sustainability reporting standards body. And on most of the boards where she serves, she chairs or is a very active member of the corporate governance and nominations committees. So I think you guys can see that we've done really well with the panel today. Thank you, Tinu, for joining us, and welcome.
Thank you.
Okay, so I think we can go right into this. So I'm going to start with Toby, again, not because this is not gentleman's first or anything, but hey, doesn't it feel good, women, for us to say gentlemen first? Okay, on a more serious note, so Toby, Ngozi spoke to this a bit in her keynote, and there's been the global commentary that Unilever has kind of like rolled back on its sustainability and ESG commitments. But from your vantage point as managing director in Nigeria, is it a perception? Is it reality? And how has the company's approach really evolved over the years?
Thank you, Bella. So I think in terms of, Unilever globally and, some of the talk about, in quotes, rolling back our sustainability drive, it actually is the opposite. We still remain deeply committed, to sustainability and ESG principles. And what has happened is that our approach has evolved as opposed to us retreating. And what I mean by that is we're probably in about the third phase of our sustainability journey. Phase one is what I would like to call setting the agenda. And this was probably in the early days when I joined Unilever, when we had the Unilever Sustainability Living Plan. This was a couple of years ago, almost 20 years ago. Was setting the bold agenda, unheard of at the time. And then phase two was incorporating that into the way we operate, which was basically what we had called our compass agenda. And then phase three, which probably started in the last year or so, is now about accelerating delivery, through our current strategy, which basically is about growth action plan until 2030. And it's about being focused, being urgent, and being systemic as well. So whilst we have the global umbrella, our sustainability goals and pillars are basically hinged on climate, nature, plastics, and livelihoods. So we sharpened it, on those four pillars. And I mean, I wouldn't go into all the details because it's the typical things. Climate is about net zero emissions, nature about, protecting nature and also regenerating nature. Plastics is all about the work to end plastic waste. And livelihood is pretty much about enhancing, livelihoods for people across our value chain. What has then happened is we focused on these priorities because, there are priorities that are important to the business. It's where we can drive impact at scale as well. So we're not trying to be the hero of the world. Where can we have that impact and demonstrate it? And so it's more about the relevance and how we're able to focus on the issues also that our consumers care about. If I bring that home to Nigeria, what we've then seen is how we execute this. We've moved from a one-size-fits-all approach to a bit more agile, localized, framework. And there is the narrative that, yes, we're in Africa, we're a bit behind on sustainability journey, but I often tend to disagree in my personal opinion. So if we cast our minds back when growing up, our mothers would use tins of cookies and the rest of it, biscuits, reuse them.
Danish butter cookies.
Blue band pack bowls, reuse it for soup and the rest of it. The message is that nothing goes to waste. So, what we're talking about today is what African wisdom already knew years ago. It's the same principle. Nothing goes to waste. And so what we've then done is, for us in Nigeria, is to have that strategic focus, where we've said we want to focus especially on livelihoods and then also on plastics. And if we talk about, and also in terms of nature as well, through localization. And localization is where essentially we continue to ensure at least 50% of our input materials are sourced locally. So for example, if onion powder is used in producing Knorr cubes, technically we have no business importing that, with the array of agric farms we have, especially in the Northwest on onions, which is a transition we've made, for example. So localization is important. We have a program called Shakti, where we empower.
No, Toby, let me stop you right there so that we can come back and really dig into it.
Okay.
Because I can sense that you're already rushing through because you're mindful of time.
Fair
Please just hold that, but we're going to come back.
Thank you.
To that, yes. So Ria, you can't talk about ESG and sustainability without really just thinking about the data and how to report, because that is a very important aspect of it. Whether we like it or not, we can't be remiss in not being mindful of that. So Ria, at RIM, you work closely with organizations across different markets. So I'm curious, what is the current state of ESG data availability and quality in African companies? So that's like the first part of my question. What is the current state? If you can just briefly speak to that, so it becomes almost like a reference point for everybody on the call. And then who is really moving the needle, and what does good look like in this space? So it's three parts. First of all, what is the current state of ESG data availability and quality in African companies? Who's moving the needle? And what does good currently look like in this space?
Definitely. Thank you so much, Bella. There's, a few aspects to that question here. And I think just taking the first aspect, if we're looking at data availability and quality to start with, what I'd say is, having worked with a lot of different organizations in different markets, the kind of key takeaway or starting point when we're looking at the availability of data in the African market is that we're not starting from scratch. Okay, it may be lower across the board, but I do really want to emphasize that it's not that there isn't any data available. I think the most important thing to understand is can we apply a different lens? So when we're looking and we're speaking to organizations and we're looking at their operations, we're looking about how they go about their business. Already, a lot of the data or insights that they're working with on a day-to-day can actually be looked at and mapped across to different ESG metrics. And that's always a really good place to start. So, when we're looking at an organization's operations, we can look at things like, are they monitoring their energy output or their fuel usage? Are we're looking at things like HR or more that social bucket, are they recording how much they're paying their staff or how they're commuting to work? And obviously other kind of wider things as well, like CSR initiatives, or is there training available? So that's always a really good starting point. So when we start to work with organizations, especially in Nigeria and across the continent, we always like to look and understand what their operations are, and they're always surprised to realize that they're already ahead of where they think they are in terms of that journey. And then we use that as a baseline to continue to build on that as well. So I think that's always a really good starting point. And in terms of the quality, I think this is really tied to the systems that a company has in place. So when we look to establish clear systems and robust systems, that very easily, can lead to an improvement in quality across the board. And I know we'll touch on systems and data and stuff like that shortly as well. But I think what's really empowering to understand as well from the organizations we worked with across the continent is really a strong intent and willingness to engage in the process. And I think that is crucial when we're looking at data availability and data quality too. Just quickly touching on the other 2 points as well. I know we're conscious of time. When we're looking at who's really moving the needle here, what I would say as well is, obviously I know something Ngozi touched on really well in her opening remarks was about this IFRS early adopters. And for us at RIM, that's really something we can see across a lot of the larger clients we're working with. So not only are we looking at who is already setting the scene, a great example that Ngozi highlighted was the MTN report that's been published. And that is a great example to work with. And I think looking at examples of those early adopters and also starting that conversation to the larger organizations, has a really big impact in shifting that needle and have that trickle down effect into the smaller organizations. But what I will also say as well is the thing that we must not forget is the size and the impact that smaller organizations and SMEs can have when we look at the totality of the impact of them adopting and engaging with the ESG process as well. So I think your last question about what does good look like is a bit of a tricky one, but I think, and I say that because as Toby kind of mentioned, there's no one size fits all. And also when we're looking at and working with such a range of organizations, this can change depending on that organization's size, their resource, and really their ambition as well. So I think we do have to take a holistic approach, but with that in mind, have obviously in the back of our mind these standards and regulations that are really working to drive and really set that scene and the kind of level that we should be looking or working towards. So I'd say let's caveat that with let's look at the size of the organization. But really, I think the important thing is let's look at how ambitious we can be and really, utilize and harness the existing data, existing operations to help companies really kind of get going and build traction with their sustainability journey.
Excellent. Thank you so much, Ria. So Nkem, the next question is for you. I mean, Ria has kind of like really painted a picture of what is currently happening. But as you well know, as we collect more data, the systems that processes have their own footprint, and then there's the change management and all of that needs to happen within organizations. So AI is not your first rodeo, right, with regards to technology advancements and how it changes things within organizations. From leading digital transformation, from your experience leading digital transformation, how could AI and data analytics help organizations move from insight to action? So like Ngozi mentioned in her opening remarks, how you can literally turn this data into tangible business value. And I guess Ngozi already gave us the one of recruitment, so please don't use that in your response.
All right. Thanks so much. And yeah, I mean, Ria has really, sort of laid my foundation. And, I just want to also sort of reiterate, there isn't really a lack of data, right? I think it's really more of a lack of insights. And that's where you need the analytics and you need the systems to actually convert data into insights, right? And when we look at, sort of AI-powered analytics, we're seeing a lot of organizations that are, sort of taking data that is quite fragmented and turning that into insights that can actually influence business outcomes, right? So we're seeing that across supply chain, we're seeing that in operations, even stakeholder engagement, right? The smarter you are and the more insights you have about your operations, about your supply chain, about what's really happening with stakeholder engagement, the better, your leadership can also adapt and address some of these, challenges that you may face. And when you then also link this insights to actual KPIs that you have for your business, then ESG really stops being a reporting exercise and becomes a value driver for your business, right? And I think that's really what, my main message today is that with AI and with data and just generally technology and infusing that and layering that on top of what you're doing as organizations across ESG and sustainability, that allows you to really unlock the business value that, all of this can bring, right? So you go from following a standard and just simply reporting to actually understanding what is happening within my business and how do I create bigger value from what I already have, right? And I think in terms of, some of the examples that we're seeing, you have companies like Palantir that work with BP, and they have used AI and analytics, not just across, not just for ESG and sustainability, but across the entire business, right? And when you then look at the fact that Palantir invested $1 billion into BP almost 10 years ago when they started this journey, and that they've signed an exclusivity, which they've now renewed for another 10 years, you understand the value of this, right? And you understand as well when you sort of follow that journey of Palantir just signing a deal with NVIDIA, and shares, of both companies skyrocketing, you see that this is not for kids. It's the future, and it's really where everybody's going. And the value that BP has really been able to gain is that they have these dashboards where they've mapped every single point in their operations, right? They've created digital twins as well, so they can understand, if I shut down water in this facility, what will happen, right? If we reduce, sort of maybe, or if we change from, carbon fuels to renewable energies in this facility, what will happen? And they're doing that in a digital playground, right? And not in their live facilities. But that enables them to actually make much smarter decisions, actually forecast what is going to happen when they actually do take those type of decisions, right? And also be able to see what are the real gains, what is the real value of doing some of these things, right? And I think that's really where technology is just so powerful, because you can simulate the things that you want to do within your business, without actually doing them, right? And then you can take that data, you can look at what are the risks that we would have faced if we had actually done this, right? What is the time gained? What is, the maybe additional revenue generated? So you can really move from sort of having ESG awareness to actual ESG performance. And I think that's really, where technology, and specifically AI, because it's obviously able to compute these data points in real time and give you much deeper insights, as well as make recommendations, right? So you move sort of from having data that you can look at, but you are looking at it in hindsight, to having data that allows you to look into the future. Thank you.
Excellent. Thank you so much, Nkem. I think I had my, ears perk up, especially when you talked about a digital playground. I thought, besides the really cool factor, I think it's just really, really telling of how useful the collation of data and becoming smarter is for businesses. So thank you for that. I will come back to that later on. So, we've talked about innovation and some execution, but none of this is really sustainable, without governance. And Ngozi, in her opening remarks, had really highlighted how ESG has shifted from voluntary commitment to mandatory accountability. She also gave some context. I know she rushed through those slides, but she did give some context around the regulatory push from European markets and all the related frameworks. So this is what you've been doing. How can African companies practically prepare to align with these ever-evolving standards?
Thank you very much, Bella. So I think that it's very important that African companies realize that when they are entering into this whole field of sustainability, they're telling their own story. So we might be using foreign or global standards, but it's for you to tell your story. And in order to be able to tell your story, I think, as Nkem said, and Ria, you need to understand, you need to localize, you need to contextualize your own story, and then be able to tell it using the standards. And in order to do that, I think one of the most important things is to actually figure out who your stakeholders are and what they want to hear from a sustainability perspective, which means digging deep into your value chain, from upstream to downstream of your value chain, and every entity, whether it's a natural individuals such as communities in which you work, or artificial persons such as investors sitting in Venezuela that are interested in investing in your business. Okay, so that contextualization, and that takes a strategy. So you do have to have a strategy. In order to have a strategy, you have to have good governance. And so I always say, is strategy before the governance, or is governance before the strategy? And I answer it by saying, I think the governance comes first. And so, do you have all the governance in place in your company to be able to develop that strategy that takes all your stakeholders into consideration? And how is that governance actually going to work in effect? Do you have a board? Obviously, the board is at the top of it. Do you have a committee that is specifically devoted to sustainability? Or is a sustainability remit something that you're going to put into different board committees? Some people will put it in risk. Some people will put it, if it's a company that's interested in energy, they may actually have a renewable energy committee, or some people will put it in finance, wherever you're putting it. And then because the board is not in situ all the time, you have to have at the management level a direct focus on governance as well. So whether you're putting it into an exco committee or you're creating a separate leadership team that deals with sustainability, and then letting it percolate through the company into sustainability champions within your operations. And I always say starting with sustainability champions, but there has to be a process of osmosis that then gets it into the KPIs of everybody, and it becomes what is done naturally. Now, there are certain things that I've described: governance, strategy, the people, but it costs money. And I think one of the things that companies need to realize is they need to have a budget for it. That's always a difficult conversation because ESG is not something that you necessarily see quarter on quarter. It's not necessarily what you're going to see in your cash flows immediately, or what you're going to see immediately in your quarterly financials. But it requires a budget. So just as you have with innovation, just as you have with long-term investments in technology, you do need to have a budget around it, a budget for the processes, a budget for the systems, a budget for the people in terms of upskilling your talent to be able to recognize what the sustainability issues are within your business, and to be able to get the insights, back to what Nkem and Ria were saying, in order to be able to do those reports. So ultimately, materiality assessments are very critical. In order to be able to do materiality assessments, obviously, you have to have the skills in order to be able to really find out what are the material issues for your company that people want to learn about and that you need to deal with within your company, whether as a challenge or as an opportunity. So we're going to have a lot more time, I think, to talk, but these are, I think, some of the main things that I think African companies need to deal with. Finally, you've got to decide which standards you want to use, and your materiality assessment, whether you're going on a double materiality perspective or you're going strictly by compliance. For example, if you're in Nigeria and you want to just use the IFRS standards, which we know from what Ngozi has already told us, that's a compliance play, or you will have your impact play and you want to use GRI reporting or SDGs or Global Compact or any of the other impact standards. There's so many of them, but those are things that you also have to decide. How best do we tell our story, and what frameworks or standards do our stakeholders, who we've already come to know in our stakeholder analysis, what frameworks or standards do they want us to use to tell this story? So Nkem, I'll stop there before you stop me.
Yes, Nkem, see, you frightened Tinu that she's calling me Nkem. Nkem, did you pinch to me a few minutes ago?
I am so sorry. I do apologize. Okay. This is not sustainable.
No worries at all. No worries at all. Thank you so much, Tinu, for that submission. Oh my goodness, you packed in so much into those 4 minutes. So we are currently at the halftime mark. So I think it might be good if people can just begin to collect their thoughts around their questions, comments towards the end, so that we can make that quick and hopefully be able to take as many comments and questions as possible. But thank you so much. I think you talked about telling your own story, and then you have to localize and contextualize per your stakeholders across the entire value chain. So this is such a fantastic way to segue back to Toby, when I kind of stopped him when he was about to go into some of the programs that they have at Unilever. So Toby, back to you. So now that we know, you made it clear in your first response that your focus really is on localization and each market being allowed to align ESG with what is most critical to them locally. So this is a pointed question. Please share an example of how Unilever has localized its ESG strategy in a way that is truly connecting with the needs of your market and people.
Thank you. So in terms of how we've been able to localize, again, I'll probably start with, we were in an era some years ago where people assumed sustainability was about planting trees. And I mean, we all know by now that even businesses, if we do not embrace ESG, then businesses themselves could go extinct. And our journey in terms of bringing it home, was something that was triggered by our then CEO, Paul Pullman, who is very widely known for championing the ESG cause. And he said something, which is that businesses cannot succeed in societies that fail. And he was stating the obvious, because you just cannot treat it as a side, as a sort of side thing you do. It has to be embedded in how you operate. An example of what we did this year, out of numerous examples, is a future Unilever Campus Ambassador program. And we did that in partnership with UNICEF, where we said, look, over the next 5 years, there's going to be at least 40 million young people coming into the job market. So 40 to 50 million jobs need to be created. What can we do? We can't employ all of them. And we also cannot, guarantee that they would have jobs. But what we said is we would ensure that they are employable. And so we went into partnership with UNICEF, gone across, higher institutions all over Nigeria to train, these students on employability skills, whether it's data analytics, whether it's even about social media usage, and all sorts of areas where practical, insightful teaching. And in doing that, we are basically touching on, some of the SDG goals like quality education, decent work, partnership goals, and the likes. But the important thing is, even through that process, we then take some of them on internships, to join us, whether it's in sales or it's in marketing or anything else. And the good thing is, some of them, by the time they went through the program, were able to come through on NYSC, and from there also, come into full-term employment, is an example. And if you look at, our level of commitment to this locally, even before the IFRS standards came in place, since 2019 in Nigeria, we've been publishing our annual sustainability statement from a point of transparency, and also being held accountable, by stakeholders externally. And we put ourselves out there, and we are now obviously one of the voluntary adopters, working with the Financial Reporting Council of Nigeria. And the important thing is to amplify that impact, especially for us working in a global company. So many things matter. I talked about the pillars. If we decided to work on climate, when it comes to greenhouse gas reduction, it doesn't mean it is not important. However, livelihoods is where we have a bigger impact. We have over 13,000 women who are, get our products, on some of them on loans, some of them on discounts, and they've turned that into proper businesses. From being smallholder retailers, some have grown into big time wholesalers, and then we lift them, above the poverty line and into prosperity. So these are ways where we've been able to, sort of bring it home, ensure that the impact is widely felt across our consumers and also across Nigerians.
Thank you so much, Toby. Thank you. That's really, really interesting. And there's something you said, in fact, two things you said that really stand out for me. I think one of them should be on a t-shirt. when you said a quote by Paul Pullman that businesses can't survive in societies that fail. I think enough said. There's just so much within that particular statement. And then when you said, the livelihoods in Nigeria is so important for you guys because it's a materiality issue. It's material to you as a business to ensure your sustainability. So very well done, Unilever, and we applaud you on what you're doing and hope others take a leaf and do the same. So Ria, we're going to come back to you, because there are different sides to this conversation. You had mentioned that a lot of companies you deal with on the continent, they have the data, but it's just that it might not be structured or they are not collecting it systemically or even storing it in easily reportable formats, So how can companies start building robust ESG data banks that helps them to visualize their performance and therefore be able to then link this data to their business and investment needs? I think pretty much I'm asking you how companies can begin to have a digital playground, like Nkem mentioned in her previous response.
Definitely. And I think also Nkem will have a lot of relevant experience, given obviously her different roles and experience with AI as we also work with at RIM. So I'll try not to have too much of an overlap because I know she's going to add a lot of insights there. But I think really when it comes to building that digital or creating that digital playground, as we'd like to say here, is let's really build off what Tina was saying about governance. And I think that's really at the core. I know Ngozi mentioned that in her opening remarks as well. And I think that's really the core where we need to look to start when we're thinking about beginning the process of building a digital playground, or what I like to call our central data repository, because that's really where it all needs to start. So of course, we've touched on how do we identify what data, what does it look like, what are we working with? And then really what we're now looking to understand is how companies can take steps to shape that into a system. So really there are kind of few key points that we need to look at when we're looking at how do we go about building a central data repository. The first kind of key pillar is who. So when we're looking at governance, we're looking at that. Who is responsible for taking the lead or ownership over building those systems in place? And usually, obviously, it kind of helps if it comes from, top up. So we're looking at even if the initiative comes from the board itself, but really who is the nominated individuals responsible within an organization or a team. The more people we involve, always the better. It kind of helps build the ethos and the understanding of sustainability across an organization. But we also see things like improving the accuracy of the data being collected. Is there, a set of team members who collect or work with that data, which is great to get them involved. And then can we get another set of individuals to validate that? And that's something we're quite keen on and we encourage with the organizations we work with again. We then need to, once we've looked at the who, we need to look at maybe the how. So how are we going about kind of creating that repository? How are these metrics being collected? Yes, for those smaller kind of, I would say organizations at the infancy of their stage, a lot of the time we can see simple, free, easy tools to use, such as, Excel, Google Sheets. A lot of the other kind of global organizations such as GRI or the UN Global Compact, as Tina kind of alluded to earlier, they do also have downloadable templates. So what I'd say is those really starting out, those smaller organizations, there are resources available. But as we start to build up, what is also really crucial is having a system that works for your organization again. So working to understand the needs, the operations, and then kind of establishing or looking to invest in systems that can really bring up to speed that data repository. So looking at organizing that data using companies that have digital platforms and tools, AI, as Nkem's kind of alluded to, can help increase your understanding and the insights and be able to work with that data, which then if we're looking at that cycle, the more we collect data, we understand it, it can really feed back into our decision making and our strategy more easily. And so I think it's a really important takeaway when we're looking at the how and the systems, is that investment is crucial. And it is a long-term investment, but I think that's also a really important message for everyone to take away in terms of the return that you do see on investing in sustainable systems and sustainability as a core business function within these businesses. And then finally, when we're looking again, so we've covered kind of the who and the how, the final kind of piece to that is the what. So when we're looking at collecting data, and we've touched on this before, yes, there's data available. Yes, let's look at what's already in the sphere of what we're collecting in terms of operations and CSR and those kind of initiatives, or, you know, data metrics around staff. But then what we need to do is kind of, again, as Tino alluded to, start to look at those frameworks that really align with kind of stakeholders and the organization internally and externally, and start to move towards identifying those metrics and KPIs. And that's where frameworks and standards really act as a good baseline for starting to build that repository as well. So I think there are a few elements there that are really crucial. But the most important thing as well is, I think, to continue to engage in the process. So establish a system for feedback, work to understand what's working, what's not working, how can we continue to improve, not only in the quality, but the breadth of what we're looking at, and really strengthen the process to feed the data and establishing that data into strategy and business insights.
Excellent, excellent, excellent. Thank you so much, Ria. So in building a central data repository, the who, the how, the what, and then the continuous engagement loop to reiterate, and, like Tino and pretty much everybody has said, continue to contextualize to be able to localize. So amazing, amazing. So Nkem, Ria, in fact, I love you're just making my job so much easier. So Ria had alluded to, of course, the budget. Tino spoke about it as well. I mean, the kind of work Unilever is doing with their partnership with UNICEF, the scale sounds broad and therefore could be expensive. So there is that fear, Nkem, this question is for you. There is that fear that, digitalization and ESG are luxuries for smaller firms, but what practical first steps could organizations take to integrate digital tools into their ESG journey without necessarily overhauling their systems?
All right. So I think there's sort of like a misconception that you need these sort of massive infrastructure and, high levels of technology investments in order to get started. And I think really what needs to shift in smaller companies is the mindset. And I saw this video, and there was a man, and he teaches some kind of course, and he says he always asks the people in his course, how possible is it for you to make $1 million before the end of the year? And, the answer is usually, 0, 5%, maybe 1%, but nobody's really confident. And then he says, how, possible is it for you to make $1 million before the end of the year if not everybody you love dies? Then it's like 150%, right? Like no questions asked. And, he says that when you have a strong enough why, the how becomes possible, right? And I think that's really it, right? When you think about sustainability and you think about investing into technology and into sustainability or ESG, it's really about how strong is your why, right? Do you have the mindset that without this, we are dead in the water in 5 years, right? And I think that's the mindset that small businesses really need to shift, because half the time it's like, oh, we don't have money for that. Yes, you do. If it's a priority, you will find the money, right? And I think also just understanding that ESG and technology are not separate goals, right? They're actually mutually reinforcing enablers that help you be more efficient, that help you, sort of really move the needle. So like Ria already said, start small, be very intentional, right? You can use tools like Excel, like Google Sheets, right? And with AI, the world really is your oyster, because anybody can even build their own dashboard, right? So if you use a tool like Manos, for example, and you feed it your base data and you kind of say, okay, this is our electricity consumption, this is how much water we use, it can build you a dashboard where it shows you the trends month on month. And this is with like literally 30 minutes of work and, like a little bit of thinking, before that, and not a lot of, sort of sophisticated and big systems. So I think AI actually is one of those things that allows small companies to really leapfrog and really act as if they're much bigger, right? So they say you've got to fake it till you make it. I think AI definitely allows you to do that. but it also allows you to really gain a lot of insights and get a lot of knowledge out of, sort of the data that you already have. And I think it's really about, can you create a strategy that takes you from we're small today, but we want to do something to this is how we're going to evolve as we grow, right? These are the type of systems, and really look at if I want to, work with a RIM, for example, right? What kind of data points do I need to already start, tracking? How do they need to be organized in order for that transition to be very easy, so that RIA doesn't come and say, "What is this? This is not going to work. You have to start all over," right? But so that RIA says, wow, this is awesome. And you know what? Plug it in and here's your dashboard. Here are your reports. Bam, 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 everything is done. So I think it's really about, being prepared, and really making sure that you're planning ahead as a small business for when you grow and for when you have the resources. But also just making sure that you're not looking at both technology and ESG as a cost center, but really looking at it as an investment that is strategic, for future-proofing your business and for growing your business. So I hope that sort of answers the question.
Yes, 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 it definitely does. And I love what you said, that technology and sustainability are mutually enforcing enablers. Awesome, 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 awesome. So, we can't be naive to think that with everything that's been said, not just here, but even before now, a lot of organizations still view ESG as a compliance checklist. But from your perspective, what could companies do? What mechanisms can help move ESG into the boardroom, not simply as a checklist, but part of strategy and culture?
Okay, thank you very much, Bella. So maybe it's the former regulator in me, but I think that compliance as a checklist can itself have an effect on changing mindsets. And I'll come to that. Obviously, if you look at a company like a Circle, what you want is that you have centrifugal forces. Those are forces from within saying this is something we want to do, because you know that when you have those types of forces, it's more likely that it's going to go into the DNA of the company, as opposed to centripetal forces that are from the outside, such as a compliance plea. So there are certain things that I think need to happen. Obviously, the kinds of people that you get onto your board. And it's, like I said before, a chicken and egg situation. If you are the kind of company that realizes that whether you like it or not, sustainability has come to stay, and that you won't be successful if you're not paying attention to it, because you are in somebody else's value chain. You don't exist in a vacuum. And that value chain is very, very important. So even if you don't want to do it from a matter of survival, which we can equate to sustainability in this conversation, you need to do something about it. You need to have a strategy, and you need to be looking at your sustainability risks and opportunities and impacts and what have you. So the right people on board, absolutely important. And they will then drive that, because we've talked about governance. We've talked about the board being responsible for strategy, the board being responsible for setting executive KPIs, the board being responsible for policy, and the board being responsible for setting also the milestones within the local regulatory and legal context. I think once you have a board like that, then that board needs to then be looking at building capabilities. So again, as I had said before, ESG is not necessary. ESG skills are not described as ESG skills. It's just something that I think, as Rima said, the repurposing of skills that people have and asking them to add other skills. So you need to pay attention to ensuring that you get the capabilities on board. I think so once you have the capabilities on board within the company, it's something that bubbles out. Now, you also have to do a lot of training and awareness. And they can be very simple things like, in Kem and Rima, and I know will agree with me on this, before you can switch on your computer, you need to answer a quiz. And that quiz is an ESG, something about ESG localized to your company. That begins to change people's mindsets. The CEO has a town hall. You're talking about ESG issues. You're not only talking about the financial numbers, but you're talking about things to do with ESG. I think setting metrics and targets within the context of your strategy also absolutely important. Now, sometimes metrics and targets will be set for you from outside, which is why I said we shouldn't ignore the outside. So if you're in the oil and gas industry, you already know that under the Petroleum Industry Act, you need to reduce methane by by a certain percentage. I think is 65% by 2031. You need to stop gas flaring, or at least reduce gas flaring by 2030. We have the carbon border adjustment mechanism. If you're exporting to Europe, you know that you need to start thinking about the carbon in your products. So those outside forces also help to reinforce if you are determined to do your business in a legal and properly regulated way. Then I think the other things are around your incentives and KPIs. Your incentives and KPIs totally important. You cannot have executives having LTIPs, having ESOPs, having short-term return, short-term benefits, and there are no attached KPIs around sustainability issues, and then that will dovetail down into the rest of the company. Finally, monitoring and measuring ESG performance, very, very important. So your gap analysis, which by the way is one of the things that very first things that the FRC is asking companies to produce if they want to produce sustainability reports under the IFRS standards. I think that gap analysis is very important because it helps you to see the gap, and you can use that regulatorily required tool to create measures and how you will monitor that you have moved from point A to point B. That helps again to bring sustainability into the DNA of the company. So there's a mixture of things, some of which we've already spoken about. And, I just thought that I would bring these ones up. Very critical to embedding sustainability within the company and changing the mindset from one that is compliance and box ticking. Once that measuring performance is done, it goes to the financial bottom line. And so you're tying in the sustainability metrics into financial metrics, and everybody begins to feel it. Thank you.
Thank you so much, Tinu. And yes, I can confirm that it is the regulator in you that spoke to compliance in that manner. But I think something that is really great about what you've just done, in your response is, yes, compliance is important. Yes, it can really kind of like shape what you need to do or what you're required to do. But as you embed and you measure and you monitor, you begin to see it across different metrics, that all of a sudden the compliance part of it is no longer seen as grudge work, but it's actually you just reporting on your business performance, period. So thank you so much for that. I'm not sure I see any questions so far, so I'm going to take 10 more minutes for the panelists. So if you please want to get your questions in, please put them in at this time so we can begin to collate. So Toby, the keynotes highlighted, the employee stakeholder voice as a defining 2026 trend, and Tinu has also spoken to that. I particularly love what she said about, integrating like a quiz in before you switch on your computer. I think that's so cool, and I'm hoping it's one of the tips participants on this call will run with afterwards, is how can companies practically institutionalize employee engagement as part of their ESG strategy? And as always, please, if there are any examples you can give from what you're doing, have done at Unilever, that would be fantastic.
Thank you. So the way I would look at it is you probably start from a point of, you can't have a purposeful company if the employees themselves do not have a purpose. And if I lean back to what Nkem had said, which is around the why, even in how we interview people, we're very big on purpose. What is your purpose? And we do things like purpose workshop, not necessarily purely from an ESG perspective, but just to ensure that you understand that life is not just about yourself. You know, there's a popular saying from a mentor of mine that your life is too small to be the focus or center of your life alone. So it starts from there. If I look at, how we've taken it from Unilever Nigeria perspective, we're proving that doing the right thing for people and planet, it's not separate from business success. It is essential to business success. It's not an add-on. And so it has to be embedded in everything we do. So if I give some examples, the factory manager who reports on his monthly performance will talk about the output from the factory, efficiency, cost, how they kept their labor costs down. But on that dashboard, you also have waste per ton. You have energy, consumed per ton of product produced, water consumed, and electricity consumed per ton. So it's not, we don't look at it as a separate thing. It is part of your performance as an operations owner. A sales lead, for example, talks about revenue generated from the general market, from supermarkets, from e-commerce, but also from Shakti women who are over 13,000.
Sorry, from who?
So we have a program called Shakti, where we empower women. We give them a stipend in the form of products. Basically, we look for the underprivileged in society. We give them products, let's say maybe to the tune of 100,000, and then they use that to start their business from their living rooms. They don't even own shops, and basically help them to build their business over time. What started as a sort of goodwill initiative from an ESG perspective has grown into, a channel of sales where we now have 13,000 women over 22 states. So we're doing well by doing good. It started off as just something where we wanted to help, but then actually it is now becoming a thriving opportunity. And it's the same way, for example, you have the logistics folks as well. They report energy per kilometer, travel. Whether or not we're able to drastically reduce that in the immediate, for example, in logistics, yes, there's stuff we can do on CNG trucks and the likes, but then there's still a lot of way to go. And then even you see, for example, the sales team talking about sales vans, how do we switch to electric, especially within metropolis areas. So what you see happen is even from bottoms up, employees buy into it because they see it as a way of life. It's not about treating it as a standalone. So we do not treat ESG as a standalone in Unilever. It is embedded in all that we do. Of course, there is leadership oversight. We have proper ways we track. But then what that does is it helps us in terms of the reporting. We have a sustainability steering committee, where and a working group where we, across the business, comprising leaders of different roles, we intersect with our sustainability performance. So you just have, the sustainability team pull all of it together, which is, hey, sales, what are you doing in your space? Bring that information. Operations, what are you doing? Bring that information. But it makes the process easier, which is why I had said earlier, we have been reporting, since 2019. Of course, we do a lot of active listening as well in terms of how we remain relevant as things evolve. And we also take practical steps. For example, we got a sort of suggestion from employees to say, yes, we are working on plastics, but if you look at the kind of products we have, a pouch of Knorr, a tube of toothpaste, you typically wouldn't see that maybe littered in the gutters. And so what we've therefore done is to say, look, we are focused on plastics. We must collect more than what we put in the environment. But then we probably also would lean into a wider business alliance, because those who are in, the bottling companies with the plastic bottles and the rest of it probably have, a larger task. And then we said, look, let's pull together and see what we can do. And so these were some of the things where even from employees, you have practical suggestions to say, look, how do we, widen the scale and impact? And of course, we continue to work on capacity development, helping employees remain modern in how we handle some of these aspects. So from an employee engagement perspective, it's really more, around embedding it into how we operate, and then it becomes an integrated driver for growth, as opposed to being an add-on.
Love it, love it. I love it. Absolutely love it. And and that's one thing we need to be conscious of is I love your vulnerability about saying that even though you're collecting all of this information, there is, of course, stuff you can do to reduce it. But you're vulnerable enough to say, you know what, we at least are even starting to collect. So we have a dashboard and then know what to track and therefore what to improve and therefore be able to report on. So you see, that way there's less greenwashing because you already have the data and you are vulnerable enough to understand that, we're not doing anything about it now like we should, but it is a target and we have a very good idea of what we can do when we get to that point. So very well done on being vulnerable. I think that's a good lesson, especially for us in Nigeria and Africa. We're not very vulnerable people naturally, but when it comes to ESG, if you don't want to greenwash, then just be honest and be transparent. And I think that's a very big lesson from your response. So we are going to take it back to Ria, and I think we're getting to the end of the conversation. So let's get even more practical. How can digital ESG tools like the RIM platform, because I know we do work with you, we partner with you, so we know exactly what you're able to do. But for the purpose of this panel, please tell us how organizations can turn the fragmented data like you identified in your first response, and even as Toby has alluded to in his last response, into decision-ready insights. But now, not just for reporting, but for competitiveness, simplification of systems, and meeting investor expectations.
It's a great question, Bella. Thank you so much. And I think it really does tie in kind of what we've discussed into those practical steps. And to begin with, I think a really important distinction to make as we're, discussing what the difference between, or how do we move away from simply reporting to more strategy and I would say widening the conversation around ESG. And I think a really important remark that was made earlier, but I know you mentioned it, and Tina, you mentioned it as well, about it's a very similar analogy between when we're looking at compliance, how do we move it away from just ticking a box? And I think it's the same approach that should be taken when we're looking at reporting. We're moving away from box ticking. It's not just I'm doing this exercise so I can publish a report. It's the report should be a tangible outcome of engaging in the ESG process itself. And I think once we have that shift in mindset as well, I think that really does kind of speak volumes to how we can continue to engage and grow on the ESG and sustainability journey. Albeit, again, coming back to that chicken and egg, sometimes engaging in a report process or a compliance process can be a really good way to start and get everyone to be engaged in that conversation as well. So I think that is something that should really be at the center and the core of the conversations as well, because from that, Bella, what we'll see as well is, again, how do we engage with those stakeholders? So as we're looking to as well use digital tools to really help the processes, when we've touched on things earlier in conversations around cost or time, or how do we, empower, upskill our workforce and our talent to be engaged in the process, this is really where digital tools can come in. And we've seen firsthand at RIM how this can not only make the process more efficient, but more engaging as well. So for example, when we look at organizations, sometimes if they're not fortunate enough yet, or they're early on, they don't have an established sustainability committee, it may be a task that is given to people on top of their day-to-day roles. So by engaging and using a lot of AI and tools, what we can do is try and streamline the process. And as well, something Ngozi mentioned about the talent and, upskilling people, but also using AI to do some of what we call the mundane manual work, using some of the tools that we've developed. It means that the staff are engaged and it can be engaged in more, fruitful tasks, or, instead of them collecting line by line, point by point data, let's use an AI tool to do that, upload documents, read it. Can the workforce and staff be, using that time to engage in sustainability training, or, looking and analyzing that data to feed that back into decision making to do with the operations and how the organization is run as well. So I think those are some of the crucial pillars that we need to be thinking about, when it comes to embedding sustainability within organizations, moving it away from just reporting. And then on top of that, as well as how we can utilize technology, digital tools, and AI to really shift that focus around sustainability, and also encourage everyone as part of the organization to engage with it as a topic.
Excellent, excellent. Thank you so much, Ria. I think that has been really, really, really helpful. And I'm telling you guys are just such a brilliant panel, because that helps me, go into the next question, which is for Nkem. And guys, I see some questions coming in. So we had asked people when they registered for the event to drop in some questions. So we're going to be taking some of those. But if there are any that are here and now, we'll take those first because you guys are on the call. And then also, we think this is such an amazing conversation. Please use the hashtag ESG Outlook 2026 to just post about your thoughts and just what you've learned from this session. So Nkem, back to you. Technology is also a consumer, right, of some of the metrics we want to be tracking. So as you begin to integrate tools, as you begin to engage technology vendors like RIM, how do you then hold these vendors accountable, if you can? So if and how can you hold these technology vendors accountable for the environmental impact of the systems that you use, or even just ensure that your AI-driven efficiencies don't quietly expand your carbon footprint?
Yeah, I mean, this is a good question and a really big concern globally, right? And when you look at, the US and China, you start seeing that it's not a technology war. It's really, who has the better, more sustainable power, right? And who can power at a really large scale, right? And so far, I think a lot of the innovation around sustainable solutions is coming, out of China. Which is, very, very interesting to just see how they are, really powering massive data centers, that use, that are built for AI, right? And I think the first step really is the awareness. Business owners need to understand that by using AI, you are automatically, indirectly consuming more power, right? You have companies like Meta who are building data centers the size of Manhattan, right? Just let that sink in, right? And I think, and not just one, right? And this is one company. So big tech in general, they are building data centers across, different regions that are focused on, AI or running AI models and in AI infrastructure. And these data centers are, significantly bigger than, the data centers that we've seen in the past, significantly more, have higher energy consumptions, which means that you automatically become also consumer of more energy, right? So I think that awareness is the first step. I think the second step is to really look at, Toby said something, we disclose because we want to be transparent, not because we actually have to, right? Or we didn't have to in the past. And I think that's really important to really look at who are the, cloud providers, who are the data center providers, who are the solution providers, and what are their disclosures like, right? What are their commitments to the environment, their commitments to sustainability? What are they doing to, also offset their carbon footprint that you then automatically sort of take on, right? And really looking at, those type of things. So I think it's also a policy question, right? So what is your policy for onboarding technology providers or engaging, technology providers from a procurement perspective, right? You should have policies in place that say, don't only look at, sort of, I guess, the track record and, all the different solutions and functionalities that the provider brings, but also look at their sustainability footprint, right? And specifically look at the energy usage and the type of energy that they're consuming, right? I think that's the only way that going forward, as a collective, we'll also be able to hold providers of these big infrastructure services accountable, right? By making sure that, we demand for that transparency. So I think that's really important. And then just internally, really monitoring your digital footprint. So that includes, sort of what is your data governance model, right? How ethical are you in the use of the AI that you're using, right? So I think it doesn't only touch on the environmental factor, but also on, what happens to your employees in, as you bring in this new technology, right? So that's a big part of the S, right? So you need to ask yourself questions beyond just the, energy consumption. I think it goes across really the E, the S, and the G. And I think that's, really where these standards and frameworks and, Tinu said governance before strategy, right? And I really believe in that as well. I think if you don't have the structures, then whatever strategy you're bringing is going to fail because you haven't actually built the structures to support that strategy, right? And I think it's the same thing with this, right? Having that awareness, and it starts at board level, right? How many board members really understand or know how the impact of AI in their organization, not just from an efficiency perspective, right? Because we talk about that a lot, right? But what is your AI manifesto in terms of human beings and displacing humans? When you look at the job losses, right? Amazon just, sort of let go of, I think 30,000 employees. And you're just like, how does this even make sense, right? The numbers are crazy. And they're not the only ones, right? In recent times, we've seen Accenture letting people go. We've seen, JP Morgan also, sort of saying, if you're not, don't have the right skills, you're out of the door. So how does that really impact, sort of the communities that we also serve in? And then I think there's that ethical part, right? How ethical is the AI that we deploy, and how does that impact as well the stakeholders that we engage with, right? So if you're in financial services and, for example, you have bias in your AI systems that give out loans, and you don't lend to women because you already have systemic bias built into your system, right? You perpetuate that by using AI and by not actually monitoring your models and by not having documentation and transparency. And when you look at the EU AI Act, right, those are some of the things that it demands, right? Full transparency of your AI models. And we're not there yet in terms of the governance, around AI, but I think that we will get there pretty soon because the adoption rate is also, sort of, I think there's a movement and we can all see it. So I think the regulators are not going to sleep on it. And they will, also probably adopt some of the existing regulations like the EU AI Act. So I think it's just really awareness around what are the governance models. There are also, standards like the ISO 42001 standard that you can look at as an organization that also helps with some of these, things, and really looking at AI from a very different lens, and not just from, oh, we're going to make a lot of money and we're going to save a lot of time.
Okay, thank you so much, Nkem. So I think as in the question, whether it's because of your vendors or if you're still thinking about it, is how ethical is your data governance model? I think that's essentially the lesson. So we're going to wrap this up. Tinu, before I ask you, this is Bella speaking, not Nkem. From your advisory experience, what practical governance or disclosure practices have you really seen help actors, as they try to differentiate themselves in increasingly regulated markets?
Thank you very much, Bella. So I really enjoyed listening to all the panelists, and I was almost like not even remembering that I would have to answer a question as well as I was listening and nodding my head horizontally. So I think if you're a student of corporate governance, you would remember that when you're learning corporate governance, we talk about 4 pillars: responsibility, accountability, fairness, and transparency. And I think that whatever it is that you want that investors are looking for, in terms of the differentiation, the kind of disclosures that you're looking for. You can put them under a roof that is supported by those pillars. And then you start looking at certain things that investors want to see. So they want to see the transparency. And I think every speaker here has spoken about that. They don't want you to hide things. I think if I localize to Nigeria, there are certain negatives associated with Nigeria. And, let's just put it out there. It's there. Sometimes you have to overcome it. And one of the ways of overcoming it is having a level of transparency that helps people to overcome any fear that you might be hiding something. So operating at a very high level of transparency. I think then having various governance structures within your organization and talking about them, a whistleblowing system that actually works and that you are reporting about, information about executive pay and how executive pay is tied to various various requirements is also, and reporting about it, stakeholder engagement and being very intentional about your stakeholder engagement, and then acting on the learnings from that stakeholder engagement, into having the appropriate internal controls. And now we know that the FRC, CAMA, everyone's talking, and the SEC talking about internal control over financial reporting, internal control over sustainability reporting, talking about those internal controls that you have, not just by way of talk, but actually because you've implemented and there's output coming out of it, and we know that you're actually doing something. Having an independence on your board also gives comfort, but not just independence that you choose, a description of how you actually compose your board so that it is fit for your strategy, and the independence, what is your process for getting directors onto your board. Nobody wants to be associated with a company where that basic element of governance, even the independent directors, we're not sure whether they're really independent. And that's why some of the recent pronouncements from the SEC or from within the code, the governance codes that have come out, and the guidelines that have come out for the regulated entities, ensuring that you actually meet those requirements that have been set forth, so that anybody that is looking at something that comes out of your company has a level of comfort that you are legally and regulatorily compliant. And then, of course, even if you don't have a standalone sustainability report because you are starting small, ensuring that there is a section of your annual report that deals with sustainability issues, that tells your sustainability story and tells how from year to year iteratively you are meeting those targets that you have. If you have to change the targets, explaining why you're changing them, whether it's because of a legal issue or something operational that happened, and just getting your story out there as a company that is well run, running according to law. I think these are tried and tested elements that will help you to be taken seriously and will help to differentiate you in the eyes of investors, and help to elevate you to say, this is a company that is at par with any company across the world. We're not saying we're looking at an African company. We're looking at a company that is in the oil industry. We're looking at a company that's with fast-moving consumer goods and that can stand anywhere in the world. Thank you.
Thank you so much, Tino. That was loaded. That was really, really loaded. So we have 5 minutes on the clock. But since I make the rules around here, I'm going to please ask for 10 more minutes. And that is because you have been such an engaged audience. We've had literally the same number of people from when we started. So I think that's a very good sign. And I promise you, the questions in the comment section are really good, and you'll want to be here for it. And I can't speak enough about my panel. They're so resourceful. Look at them typing away. They're already responding to some questions in the chat. So please follow the chat as well. for the responses. So I'm going to take the top two. This one is from Onyinachi Achumba, and he or she says, understanding that data is the backbone of credible ESG reporting, many companies continue to face challenges with supply chain transparency and scope 3 emissions tracking. What practical steps can organizations take to effectively engage suppliers and gather reliable ESG data, especially across informal or fragmented value chains? Toby, I feel like this one is coming for you. Should they land?
Sure.
Okay, please
Yeah.
respond.
So, I mean, this is a very tough one, to be honest, because as much as we talk about the success we've witnessed in Unilever in terms of Unilever Nigeria, in terms of localizing our input materials to over 50%, it has been a bit of a painful journey. And I gave an example earlier of onion powder, but you would also appreciate that to put onion powder in a cube of Knorr, the health parameters have to be very, very detailed. There is zero room for error. Otherwise, you could have microbial issues and the rest of it. So we have a program called Partner to Win. And basically what that program is about is to say, look, we no longer treat you as a vendor. We treat you as a partner. So it's not a case of, yes, you go and supply this to me. We come with the weight of our R&D and everything else that we have, and then we work with you. We also understand that some of these things might take time. And so we ensure that it is something where we lay out a proper time frame. And I think that's what the transparency does, because we say, look, this is maybe an 18-month journey. It's not a calendar year journey. And what that does is you also have to, as a vendor, as a partner, have to open up in terms of your extended chain. And then we kind of co-create, that journey together. So that level of partnership, what it does is, more often than not, most of, as was said in the question, a lot of these suppliers are not exactly well organized when it comes to things like this. So we then kind of migrate or share our own standards of reporting. Look, this is how you should track this. This is how you should track and all of that. And they adopt. And then over time, it becomes a lot more seamless because we're speaking the same language. I mean, the only caveat I would put on the table is it's easier said than done. It requires a lot of patience. There are instances where we've had to cut short some relationships because we've set the standard. And if you're not, willing to operate at that level of transparency and also at a certain standard, then we cannot operate with you. So we do an annual qualification of these partners, or at times biannual, where there's sort of like a certificate where we take off to say, look, per our own ESG standards, we believe that you're a qualified partner. And then more often than not, after the teething stage, it becomes a lot easier because it's just more of iterations of improving on what you have in place. Yeah.
Okay, excellent. Thank you. Thank you so much. And I think, one thing early adopters especially need to be mindful of is that they are also shaping human behavior across their entire value chain. Right? So I think that's a responsibility that they should just step up to, because in the long run, in fact, even in the short term, it also provides value for them. So I think it's important that you nudge behavior. So I'm going to segue into this next question, which is also about stakeholder management. And this question says, how can we extend ESG impact beyond the workplace, making sustainability practical and inclusive for communities, not just organizations? So I'm going to direct this to Nkem because of her brand marketing background, and because I know that it is very important for all of your stakeholders to be carried along. So, I love how you use the term storytelling so much. We should have coffee over that particular phrase you keep using, because it's one of my favorite terms as well. But Nkem, also tying into what Toby has just said, the nudging of human behavior? I think essentially that's what this question is speaking to. So how do we make it practical and inclusive for communities, not just organizations?
All right. So I think there's some brands that do this really well, like Patagonia, and they're a sustainable clothing line that basically have the sort of ethos of what Toby was talking about, right? Don't be a consumer, don't buy too many things from us. If your jacket has a button that's missing, bring it back, we'll fix it. If you don't want the jacket anymore, bring it back, we'll trade it in for something else that you may want, right? And this goes beyond just what they're teaching the consumer in that interaction, right? And a lot of people who actually buy Patagonia, they buy it because they deeply, buy into the purpose of the brand. So I think and Toby spoke to this as well at the beginning, right? The purpose is really, really important, and communicating that purpose through your storytelling, letting people know, right? This is who we are, and this is what we stand for, and this is how we would like you to behave. Patagonia also, when you go on their website, they have a lot of educational material around environment, around sustainability, around how you engage people, right? So, and they do that as well for their vendors. So the same way that, Toby said, okay, we onboard you and, we try and train you and we try and tell you this is what you should be doing in order to work with us. They, sort of layer that on really, really strong and make sure that the brands that they work with really live and breathe that, sort of environmental impact and being fully sustainable and not being wasteful and producing in ethical ways and making sure that the entire value chain is really green but also ethical, and that their employees are being compensated properly. So I think it's really about sort of making sure that you are believable as a brand, right? Because you can say all of these things and do the exact opposite, right? And that's what we call greenwashing. And brands like H&M have gone under fire for that, right? Where they're like, oh yeah, we pay fair wages, but then where they produce in Bangladesh, they pay less than minimum wage, but their CEO takes home 3 million euros, right? Those type of discrepancies you really shouldn't have, right? You should really do what you say, right? And make sure that you are honest, right? And that, like Toby said, we're not there yet. We don't always get it right. These are the targets for the future, and we are working on that, and hold us accountable to that. And I think that's really what will also drive change. I think the media also obviously is a really strong way of influencing behavior, right? Or creating programs in schools, right? So when you look at societies that, sort of have cultures of high levels of cleanliness, and where you don't throw things on the floor because, people will arrest you, or where people will just look at you like, what is wrong with you? Why are you, acting like a hooligan, right? Those cultures have that behavior imbibed, not just in the homes, but also in schools, right? So I think we need to also figure out what kind of programs as organizations, and you don't need to be big for this, right? You can be a small organization that says, the school in my environment, my team is going to go there and we're going to have a session on don't throw stuff on the floor. Why are you littering, right? Toby talked about packaging inside our gutters, right? And just on the streets. And it is that behavior of, oh, somebody will pick it up, somebody will clean it up, right? What else? If I don't throw it, then, the people in Lagos State waste management don't have a job, right? And that thinking is what actually adds to sort of pollution. But if we were addressing that through a program, through games, through something that is fun and engaging people that are really young kids, right? So when I talk to my son, I'm like, like, you need to pick stuff up. when your friends come over, tell them to pick stuff up, put it in the bin, and just reinforcing that. So yeah, I hear him talking to his friends. No, don't put the, crisp wrapper there. Go put it in the bin. If not, my mom's going to be really angry because we don't throw stuff on the floor, right? And that is just me having reinforced that over and over again. And I think that's where brands that have media presence, digital, social media presence can really do a lot of the work, right? And sometimes it's very subtle messaging. It doesn't need to be, sort of like an in-your-face campaign. It can just be you seeing the same image of clean.
If you give all of this away, why will they come to you for business? Please. As a member of your personal board of directors, you are at this point oversharing. Okay,
Well,
so we're going to take one last question, and I think I'm going to take this right to Ngozi. Ngozi, please, you are on the clock. I shall mute you if you go on longer than 90 seconds. So this person is saying that looking at Nigerian companies and their IFRS, ISSB compliance, this person finds that Seplat, being one of the 4 companies, has endured regulatory issues. So their question/concern is over regulatory governance within SEC that says it would work with Seplat to preserve market integrity and therefore transparency. Could this be translated to mean that the rules would only fit the local outlook and interests?
Well, this question is so deep, and I don't want to green hush, nor do I want to greenwash. But one of the key things that we have to be sure about is that our regulatory bodies are not only holding us to standards, but they're holding themselves to standard. And I think what we have to do is look at the subtext of what SEC is actually saying. And this is a big issue because Seplat in many ways has been held up as one of the companies that's making real progress on ESG. It's a champion of the indigenous oil industry. And to see some of what's been going on in the newspapers, which are clearly regulatory and governance failures, I think is a bit of a challenge for many people. So I think you should read the subtext of what SEC is saying, and we should understand that it does mean that our regulators can and will hold us accountable. And when they talk about, work with, what they're basically saying is we are now going to be looking in details at what this company is doing. If they are not moving in the right direction, recognize that we have within us the capability to actually come in and right the situation. I think that's part of the subtext. When they talk about integrity, market integrity, maintaining market integrity, what they're trying to say is that we will make sure that the stock market remains fair, orderly, and free from manipulation. Again, subtext that says we want to make sure that pricing is not going to be manipulated or distorted by false information. Corporate disclosure needs to be accurate and not misleading. So no greenwashing, no green hushing. Let's actually be clear that we are saying things as they are and the data is real. And that we're giving investors access to material information that is actually going to allow them to make the right decision. Transparency, I think what they're saying here is that, and what they mean is that, Seplat has got to be fulsome, it's got to be timely, and it's got to be truthful in its disclosure. We've talked a lot about transparency. And they've got to give the right and relevant information on its operations, its finances, and its governance, which is what partly we are worried that they have not been doing. So your financial reports, your announcements, your governance update needs to meet regulatory standard. And that the company's got to be able to disclose boardroom disputes fairly, truthfully, regulatory sanctions, legal issues clearly. And that basically what they're saying is we're now going to be monitoring this stuff in detail to ensure that the communication is open, with shareholders, stakeholders, fulsomeness of the market. And again, I would read cooperative oversight, not to mean that they're going punitive yet, but it's a subtle threat. It says, if you don't work with us and you don't show progress, we reserve the right to actually come in and measure. So it's measured regulatory intervention. And it matters, as I said, because we have to be sure that our regulatory bodies are able to reassure us that they're watching closely and they're actually protecting investors and other stakeholders. So let's go back to our key trends. And one of the things that we've said, many people have talked about on this call, is the importance of your board and the governance, the importance of transparency, accountability. That's what's going on here. And I think it's a very good question for everybody on this call to realize that I think Nigeria means business in terms of ESG.
Absolutely. Absolutely. Thank you so much, Ngozi. In closing, what I would say is that what this conversation has done is to establish that the G in ESG isn't silent. I think that's definitely one thing that it's done today. It's also shown that ESG success, sustainability success, it's not about perfection. It's about progress, it's about alignment, and it's about authenticity. That is how Nigeria and Africa can localize and contextualize to be able to have our own success stories that impact society at large, and I will end with this, as we prepare for 2026, I don't think there's a question anymore as to whether ESG matters, but it's how we make it matter for our organizations and the society at large. Because remember, businesses cannot survive in societies that fail. Thank you so much to our speakers. Ngozi, brilliant as always. Toby, I feel like going spiritual. God bless you for what you shared today. Ria, thank you. We more than ever know what RIM is doing and how you're impacting the ecosystem. And Kem, enough said, AI queen, thank you so much for everything. Tino, the regulator in the house. You didn't make us feel like there was an outsider in the room, and we thank you for that. Thank you all so very much. Enjoy the rest of your day. It's almost Christmas, but we hope that this helps you wrap up the year and kick off 2026 on a fantastic footing. All the best and enjoy the rest of your day.